Hey, welcome to the 40 Finance channel. Obviously, the stock market's had a pretty big meltdown here, particularly over the past few days. In the past 30 days, the QQQ is down almost 13%. And a lot of that is from the last 5 days where all this tariff stuff started going on around April 2nd. And the thing that stands out to me with all this, and it's not something that I typically do on this channel. I try to stay grounded in stock fundamentals, earnings, sales, a little bit of momentum. But this whole thing that we've seen this week, all of this tariff talk, feels a lot like stock market manipulation to me. And when I say manipulation, I'm not talking about like fudging corporate earnings numbers or, hiding expenses and things like that. What really strikes me is we were at an all-time high, kind of coming into this year. And if you are looking at it from a White House perspective, it's going to be very hard to take that next jump, right, to go another 20% up with as much success as we've had. So now we get all these tariff threats that have suddenly become a reality, and you're seeing a huge pullback in the market. And if you scroll back just year to date, the QQQ was at $510. Now you're at $428. And suddenly, if you just got in today and your only hope over the next year or so was to get back to the high point of 2025, well, that would be a return of $90+ right off the bat, and that's just the QQQ. So if I'm sitting in the White House and the only thing I cared about was bringing the opportunity for more stock market gains, or, there's a lot of jokes about Nancy Pelosi's stock trading record. And if you believe that politicians benefit from changes, big changes in the stock market, you might agree with me that at the end of the day, all this has done is pulled back from these all-time highs. A lot of the economic fundamentals haven't changed terribly. And there's a few other caveats with this whole thing that I think don't get as much press as some of the others. And one of those things that I noticed that I don't think people talk about too much are these random interviews with Scott Bessent that have been, I've caught him on Twitter myself over the past 24 hours or so, but he's come out with some interesting quotes. And one of them is captured here in this one tweet. I wouldn't try to retaliate, referring to other countries and the tariffs. As long as you don't retaliate in a tariff war, this is the high end of the number. So if he says that this is the high end of the tariff number, and you're going to take everything he says to be true, which is obviously anyone's guess, but then where do you go from high? You go lower. So that automatically sets up an easy win just there for the stock market. Now, does that by itself get us back to $510 in the QQQ? I'm not sure about that, but does it get us higher than the 428 we're at today? I would say probably, depending on how the headlines roll. Now, the catch is we don't know when these tariffs, if this is the high, we don't know when we will crawl back from some of those numbers. It could be a month, it could be 6 months. Nobody knows for sure. But I think when you have a guy in the White House who's calling this the high point, at least to start, you would have to assume that there's more room to go down in what these tariffs are than there is for them to go up. Now, in the same interview that I have highlighted here, the Treasury Secretary is talking about the stock market in terms of the tariffs, and he's saying that's a Mag 7 problem, not a MAGA problem. Now, people who follow the stock market have taken that as incredibly bearish, that particular statement. But I think if you zoom out a little bit And at least knowing how Trump has looked at the stock market in the past and how much time he has spent focused on the results of the stock market, the bottom line is we have a president now who we're familiar with who typically leans towards stock market favorable things. And that, to me, is another reason to feel potentially good about a rebound upcoming over the next 30, 60, 90 days. Now, the other side of this that doesn't get a lot of press, in my opinion, is the fact of how this will impact interest rates and how it has impacted interest rates already. And this tweet here sort of encapsulates that concept. Folks just don't get it. Rates are declining. Besant is a happy man, the Treasury Secretary. His North Star is the U.S. Treasury 10-year yield, not the Fed. Tariffs will eventually force the Fed's hand. Let the crazies in the equity futures have their fun. The real information is in the credit markets. And then, interestingly enough, this next tweet that showed up on the search, granted it's back from March 31, Treasury Secretary says long-term interest rates must come down. And this particular person, James Lavish, shows interest payments on federal debt. And assuming this graph is true, I've not looked this one up myself. That's obviously an intimidating increase in interest payments. So what would happen if all we're trying to do, or all the White House is trying to do, is lower interest rates? They've come to this conclusion that interest rates are too high. They're not going to wait around for the nickel and dime changes at the Fed, the 0.25 at a time, the so-called holding pattern because the economy is doing well. That's what, Jerome Powell's been saying the past couple meetings. So what if they're just forcing it? And what do you know about interest rates going down? Well, historically, when at least they start to go down, there's quite the celebration in the stock market. When you start, let's just say at 5%, and you get that next leg down to 4.5 or 4 or 3.5, it's usually a big turn in the stock market in celebration, because not only does it fix, whatever problem is indicated on this graph with the interest payments, but you also have corporations who are borrowing and they pay less interest. Then you have the American homeowner who's been trapped full of home equity for however long. They suddenly have an opportunity maybe to tap into that home equity and put it into other things. So at the end of the day, while all this stuff seems terrible right now, and it is, and you're obviously losing a lot of steam in the markets, to me, it does feel a little bit like a forced manipulation that could, if you tread carefully, produce fantastic returns, not only in the long term. I think the long term is pretty obvious for most investors in the stock market. But if you want to talk about, let's just say, a 1-year return, if you want to talk about maybe a 90-day return, well, then this top has been chopped off. And all you're rooting for is not the next all-time high. You're rooting for the next get back to par, or the next 80% of par. And that's a pretty good number if you're starting where we are today. All right, guys, so that's a quick take from a random guy on YouTube about the current situation and how it might be a different way to look at it as it pertains to the stock market. And before you go, you saw a couple screenshots of Seeking Alpha today, including what's on here right now. If you're interested in learning more about the stock research platform that I use every single day, you get a free trial and a discount on your first year when you use the link in the description. Let me know if you guys think we are in the midst of market manipulation and which way you think things go from here. Leave a comment down below. I hope everybody's doing well. We'll see you on the next video.